stimulus, as you said, Manus, in a world, if we didn't have central banks, what would we do? But looking at dollar yen for me personifies everything that there is to do with risk. I look at terrorism on one side, which is growing week by week, and I look at markets and stimulus on the other side. The proclivity to take more equity risk, is it still there?
To a certain extent. I mean, it's still a hated bull market. I mean, it is a bull market in terms of MSCI World and, of course, especially US stocks. And we see sentiment as being relatively depressed. I know volatility is low with the VIX, but whether we're looking at cash balances within portfolios, whether we're looking at the American Association of Individual Investors, okay, it's popped up from low levels, but if you put that on a longer-term chart, still relatively depressed. There's a 5-year chart now, just somewhere in the middle, so near all-time highs in certainly in the US, but just, you know, if you drew a line from
that's this chart here, which is the AAII. This is what you're talking about.
Individual investors are just, in terms of their bullish sentiment, is somewhere in the middle. Quite unusual when we're at all-time highs. It's a hated market, and the reason is, of course, is that we're not seeing too much in the way of earnings growth, and it's all about these bond proxies investing in stocks which act like bonds. So generally, the fact that it's a hated market, I think, is positive.
Alan, interestingly, you're overweight emerging markets. Where does that take us when we're looking at potential dollar strength coming back? I've got a chart showing where we're looking at the world interest rate probabilities going. We're starting to gather pace when it comes to the United States in particular. We're looking now at a 45% chance that we'll see a rate hike come the end of the year. That's picked up significantly from the depths of the sell-off and the concerns and the panic and paranoia we saw post-Brexit, post the UK voting to leave the EU. We seem to be game on again a little bit, that we could see a rate hike to the tune of 0.5% overall for rates in the US. Where does that leave the dollar, and where does that leave your emerging market call?
So, Caroline, I think you're right. I think rate hikes are coming in the US, but at a modest level. And I think EM markets are taking comfort from that, one. Two, it's not all about rates when it comes to FX. We were just talking about dollar yen. Obviously, Japanese rates are ultra low, yet the yen's strengthening. So it's not just about rates. So, and in previous rate hiking regimes, actually the dollar has sold off, and notwithstanding the slight dollar strength we're seeing now, it has followed the script, this more recent Fed hiking environment we've been in the sense that the dollar has not strengthened. So, yes, I know a lot of people say rates up, therefore the currency should go up, but it doesn't always play out like that. And in any case, to reiterate, modest rises in rates, and I think that's important for emerging markets. What emerging markets doesn't like is the idea that rates could go up 1.5%, getting to the 2 to 3% rate structure in the US, because that would really compete with EM assets.
Is the Fed already vicariously tightening by the very nature that you've got Bank of Japan probably in a more ease mode, the UK set to do more, we understand. I mean, the central banks don't seem to be at the end of their game. They're waiting for the fiscal stimulus. The Fed are really dealing with doing nothing, leaves them still in a tightening position, doesn't it? Yeah, Manus, that's a good way of looking at it. If you look at it on a relative basis, the US is tightening just by doing nothing. And of course, but if you look at the US economy, it looks pretty robust. Yeah. It really does, and therefore you can really understand. Now, they say they're data dependent. We think they're also market dependent. These calmer markets will allow them to raise rates later in the year. Do you think they're going to be much more aggressive? Do you think the statement will shift the dial on Wednesday? No, everything we see from Janet Yellen is caution, isn't it? So, no, we're going to have to work it out. We're going to have to get in here in the morning. It's Thursday morning, is it? When we have to get in here and work out from the statement and say, oh, yes, it seems likely, as opposed to being super clear.